Most people who receive Social Security benefits believe that because their benefit is a government payment, not a paycheck from an employer, it does not need to be reported on a federal tax return the same way other income does. That is not actually how it works. And the difference between that belief and the reality is one of the most common reasons IRS refunds for seniors get delayed, sometimes by weeks during tax season. So today we are going to explain exactly how Social Security benefits interact with your federal tax return directly from IRS Publication 915 and the official guidelines at irs.gov. So you understand what needs to be reported, how to report it correctly, and why getting this one piece right keeps your refund moving on schedule. I am Andrew, and I have been working through IRS Publication 915, the Social Security Benefits Worksheet in Form 1040, and the IRS's official guidance on benefit taxation, specifically as it applies to retirees and seniors. Everything here comes directly from irs.gov and ssa.gov. Before we get into this, if you find this kind of plain language explanation of Social Security and tax rules useful, subscribe and turn on notifications. Every week this channel covers one benefit topic in the same straightforward format, with no pressure and no drama. Now let us get into exactly how Social Security income interacts with your federal tax return and where the most common reporting mistake happens. The most common misunderstanding about Social Security and taxes is that Social Security income is never taxable. Many recipients believe that because they already paid into the system through payroll taxes during their working years, the government cannot tax those same dollars again when they come back as benefits. This misunderstanding is completely understandable. The logic behind it makes intuitive sense, and for many lower-income recipients it is functionally true. Their Social Security is not taxed, because their total combined income falls below the threshold where taxation begins. But here is how it actually works. Whether your Social Security benefit is taxable, and how much of it is taxable, depends entirely on your combined income for the year, which is a specific figure the IRS calculates by adding your adjusted gross income, any tax-exempt interest, and half of your total Social Security benefits received. If that combined figure exceeds a certain threshold, a portion of your Social Security becomes taxable. The maximum taxable portion is 85%. No recipient is ever taxed on more than 85% of their Social Security benefit, regardless of income. We are going to go through each part of this in detail so that by the end of this video, you have a complete and accurate picture of how this calculation works and where the reporting mistake most commonly occurs. To make this concrete, let me use an example. Consider someone like Clarence. Clarence is 71 years old, lives in Tucson, Arizona, and spent his career as a high school shop teacher before retiring at 66. He receives a Social Security retirement benefit of $1,890 per month and also withdraws approximately $14,400 per year from a traditional IRA he built up over his working years. Clarence believed his Social Security was not taxable because he had heard that government benefits are exempt from federal income tax. When he filed his return, he did not include his Social Security benefit in the section of Form 1040 where combined income is calculated. His return was flagged by the IRS's automated matching system, which cross-references the SSA 1099 form the Social Security Administration sends to both recipients and the IRS each January. Here is what was actually happening in Clarence's situation. His combined income, calculated as his $14,400 IRA withdrawal, plus half of his annual Social Security benefit of $22,680, which is $11,340, came to $25,740. That figure exceeds the $25,000 threshold for single filers, which means up to 50% of his Social Security benefit became taxable. Because his return did not reflect this, the IRS's system flagged a mismatch, and his refund was delayed by 4 weeks while the discrepancy was reviewed. This is not unusual. This exact situation, a mismatch between the SSA 1099 on file with the IRS and what appears on a tax return, is one of the leading causes of refund delays for Social Security recipients. Understanding the calculation would have answered Clarence's question before he filed. The SSA 1099 and why it matters for your tax return. Every January, the Social Security Administration mails a document called the SSA 1099, formally titled the Social Security Benefit Statement, to every recipient who received benefits during the previous calendar year. According to ssa.gov, this form shows the total amount of Social Security benefits you received in that year. It is the same information the SSA reports directly to the IRS. That last point is important. The IRS already has your SSA 1099 information before you file your return. When you submit your Form 1040, the IRS's automated system compares what you reported against what the SSA provided. If those numbers do not match or if the Social Security income is omitted entirely, the system flags your return for review. That review is what causes the delay. You might be wondering, what if I never received my SSA 1099 in the mail? The answer is that you can access and download a replacement SSA 1099 at any time through your My Social Security account at ssa.gov or by calling the SSA at 1-800-772-1213. You do not need to wait for a paper copy to file your return correctly. How the combined income calculation works. Now that we understand the SSA 1099, we can look at the calculation that determines whether your Social Security is taxable. The IRS uses a specific figure called combined income, sometimes also referred to as provisional income, to determine how much of your Social Security benefit, if any, is subject to federal income tax. According to IRS Publication 915, combined income is calculated by adding three things together: your adjusted gross income, any tax-exempt interest income you received, and exactly 1/2 of the total Social Security benefits shown on your SSA 1099. This next part is where it gets more specific. Once you have your combined income figure, the IRS applies it to one of two thresholds. For single filers, if your combined income is below $25,000, none of your Social Security is taxable. If it falls between $25,000 and $34,000, up to 50% of your benefit may be taxable. If it exceeds $34,000, up to 85% may be taxable. For married couples filing jointly, those thresholds are $32,000 and $44,000 respectively. This applies in most cases. The exceptions include recipients who are married but file separately. That category is handled differently by the IRS. And in most situations, filing separately results in a larger taxable portion of Social Security than filing jointly would. If you are in that situation, IRS Publication 915 walks through the separate calculation in detail. In Clarence's situation specifically, his combined income of $25,740 put him just above the $25,000 threshold for single filers. That meant up to 50% of his Social Security benefit was potentially taxable. Not all of it, and not 85%. The actual taxable amount is determined by completing the Social Security benefits worksheet included in the Form 1040 instruction booklet, which walks through the calculation line by line, where the reporting mistake most commonly happens. And finally, this is the piece that ties everything together. The most common tax reporting mistake that delays refunds for Social Security recipients is not entering the SSA 1099 total on line 6A of Form 1040. Line 6A is where you enter the total Social Security benefits received. Line 6B is where the taxable portion is entered after completing the worksheet. Both lines matter. Leaving line 6 a blank, even if you believe none of your Social Security is taxable, creates the mismatch that the IRS's system flags. You might be wondering, if none of my Social Security is taxable, do I still need to put a number on line 6A? The answer is yes. According to the IRS Form 1040 instructions, the total benefits from Box 5 of your SSA 1099 should always be entered on line 6A, regardless of whether any portion turns out to be taxable. Line 6B will simply show 0 if the worksheet confirms no taxable amount, but the IRS needs to see that you accounted for the income before concluding it was not taxable. The maximum Social Security retirement benefit for someone who claimed at full retirement age in 2026 is $4,018 per month, or approximately $48,216 annually. For a recipient at that benefit level with additional retirement income, the 85% threshold applies, and roughly $40,983 of the annual benefit would be potentially taxable. Most recipients receive considerably less than the maximum. The average 2026 retirement benefit is approximately $1,976 per month, and many fall below or near the lower threshold where only 50% or none of the benefit is taxable. One thing worth understanding about how Social Security taxation connects to Medicare is that the income thresholds used to determine Medicare Part B premium surcharges, known as IRMA, or the income-related monthly adjustment amount, are calculated using your modified adjusted gross income, which includes the taxable portion of your Social Security benefit. So accurately reporting your Social Security income on your tax return also affects how Medicare looks at your income for premium purposes 2 years later. This is not a concern to act on today, just something worth knowing so you have the complete picture. Before we finish, let me answer 3 questions that come up most often about Social Security and tax refund delays. Question 1. I do not owe any taxes. Do I still need to file a return if I receive Social Security? Answer. It depends on your total income. If your only income is Social Security and it falls below the combined income threshold, you may not be required to file. However, if you had any federal taxes withheld from other income sources or are eligible for refundable tax credits, filing a return is the only way to receive those amounts back. The IRS Interactive Tax Assistant at irs.gov can walk you through whether filing is required for your specific situation. Question 2. How long does an IRS refund delay typically last when there is a Social Security reporting mismatch? Answer. According to the IRS, most returns flagged for automated review due to income discrepancies are resolved within 6 to 8 weeks of the original filing date. If your return has been delayed beyond that window, you can check its status using the Where is My Refund tool at irs.gov or by calling 1-800-829-1040. Question 3. Can I have federal taxes withheld from my Social Security benefit to avoid owing at tax time? Answer. Yes. According to ssa.gov, you can request voluntary federal tax withholding from your Social Security payment by completing Form W4V and submitting it to the SSA. You can choose to have 7, 10, 12, or 22% withheld. This is entirely optional and can be started, changed, or stopped at any time. Everything we covered today applies generally, but your specific tax situation may have details that change how these rules apply to you. The most reliable way to get your exact answer is IRS. IRS.gov, where IRS Publication 915 covers Social Security benefit taxation in full detail, and the Interactive Tax Assistant tool walks through your specific filing situation. For questions about your SSA 1099 specifically, SSA.gov or 1-800-772-1213 can provide a replacement copy or confirm the figures on file. For broader tax guidance for seniors, IRS Publication 554, the Tax Guide for Seniors, is available free at irs.gov. And if you need free in-person tax preparation help, the VITA program and AARP Tax Aid both offer free filing assistance to seniors at locations across the country. These resources are free. They are official, and they will give you answers specific to your situation, not general answers like this video does. One factual note before we finish. The IRS contacts taxpayers by mail, not by phone calls threatening legal action over unpaid taxes, not by texts claiming your refund has been held, and not by emails asking you to verify your Social Security number or banking information. If you receive communication like that, it is not from the IRS. You can verify any IRS correspondence by calling 1-800-829-1040 directly. I am curious, was there a specific part of how Social Security benefits are reported on a tax return that you found most unclear before watching this? Leave it in the comments. The most common questions become future videos. That is the tax reporting mistake that delays Social Security recipients' refunds explained as clearly as I can put it. If something is still unclear, the comment section is open, and I read every question. If this was useful, share it with someone who is getting ready to file and is not sure how to handle their Social Security income on the return. I am Andrew. I will see you in the next one.